Dear fellow business owners, in this video, I'm going to cover the 7 major accounts payable errors made by small business owners and how to avoid them. My name is Jayanti Ganapati. I'm the owner of Finaccurate. We are an accounting firm based in Boston, Massachusetts. So we work with small businesses a lot, and these are common errors we find most of the small business owners make, and that's what we are going to cover in this video, and also a solution on how to avoid them, so you have a perfect accounts payable system. So let's get to it. Number one, paying invoice before you receive the goods or service. This is one thing we see when there are so many people handling invoices and payments in your business. There's one person who is responsible for receiving invoices and paying them. As soon as he or she receives the invoice from the vendor, they are often not checking whether we really received the service mentioned in the invoice, or if it's a product, did we really receive the product in. Before checking all that, they are going ahead and making a payment to the vendor. So what happens in this case, you're paying for something you haven't received the benefit of it being a service or a product. That's a common error we see. Number two, excess payment. This is another common error that we see as well, where you receive an invoice. Often you will see, if you're working with a vendor on a regular basis, the next invoice they will say this is a carry forward balance and this is the current invoice due. Most of the time, what we find is the accounts payable person is going and paying the invoice in full, even though they would have already paid that opening balance previously. Maybe it's just not reflected in the vendor statement. Instead of just paying the current invoice amount, they are going ahead and paying the entire balance, which includes the balance from the previous invoice, which is already paid and just not reflected on the vendor statement. So this happens. This can result in overpaying the invoice than what is actually due. Most of the vendors, they have a good system on their end, so they will reflect the excess payment as a credit in your account. Some may not do that. So you are actually relying on your vendor's the system. If you make a mistake and you're hoping that the vendor will show as a credit on their on your statement, but it may or may not happen. And what happens is, if you don't catch it, you ended up paying more than what you are responsible to pay on the invoice. The next we see is double payment of the invoice. This happens when you receive an invoice, you already paid it, and let's say the vendor sent it again. It could be the vendor did not receive the payment and they are showing the invoice is still outstanding, or you made the payment, it hasn't still reflected in the system, so they are sending an invoice again. So the person receiving the invoice, if they don't have a good system to identify if the invoice was previously paid or not, you might end up paying the invoice again. And if you're not using the system to catch duplicate invoices, so this can be an easy error to make a double payment on the same invoice. Next is the data entry errors. Say the person is entering the invoice or making the payment. Let's say instead of paying $100 on an invoice, let's say they paid $200, or they entered the amount wrong, or they entered the banking information wrong if you're making an electronic payment and they pay someone else. All of these errors can result in either overpayment, underpayment, or paying a wrong vendor. So again, what happens, you have to catch it, and then next you have to fix it. All of this is taking more of your staff time and more of the hours to chase and fix and correct things. So these can be avoided when we will show you the ways that you can avoid these common errors and have a perfect accounts payable system. Next is slow invoice processing. say you're receiving the invoice, but the vendor sent the invoice either you didn't enter right away, or it's staying in the desk of the accounts payable person or your accounting department, and they haven't got to it, they haven't entered it. So what happens is you have a process of entering the invoices very late in the system, which results in making a late payment. Most of the time, this can result in you paying a late fee to the vendor. Most of the vendors, if you have a good relationship with them, they can waive the late fee, but it doesn't happen. Let's say you're using the established vendor, they have a very low tolerance in waiving the late fee. Some vendors waive it for the first time. So as a warning, they will say, okay, we will waive your late fee for the first time, but next time this happens, we cannot do it. So again, you're relying on the vendor to waive the late fee. So all of this can be avoided if you have a good system to enter the invoice and making the payment on time. Next is lost invoices. If you're receiving invoice by paper or by email, and you have multiple person receiving the invoices or opening the mails, if you don't have a good system to follow, to receive, track, and pay invoices, this is easy way for invoices to get lost. So what happens when the invoice get lost? A few things. Number one, you are not recording the liability in your books, and number two, you are not paying the vendor, resulting in late payments, or it can impact your credit score or future credit terms with the vendor. So many implications of a lost invoice. The seventh one, more common mistakes we see is tracking invoices in Excel spreadsheet. Especially as a small business owner, you tend to receiving invoices and you're not using an accounting software to enter the invoices to track and pay, but instead you are recording the invoices in Excel spreadsheet. If you have a good system to record invoices in Excel spreadsheet, if at least that is fine. But this is again another way for errors to happen, losing track of invoices. This can lead to all of the errors that we saw just now. All of the six errors that we saw just now. You could be prone for data entry errors, double payments, excess payments, paying invoices without checking for the receipt of goods or service, or all of this can happen if you are tracking and paying invoices manually without relying on a software. So it can affect your terms with the vendor, resulting in late payment fees, and also misrepresenting the liabilities of your business. So these are some of the common errors that we saw while working with a small business owner. So here now you can ask, what are some things I can do, or steps I can take to avoid these common errors? So let's get to it. So how to avoid these common accounts payable errors as a small business owner? Number one, establish a process for receiving your invoices and paying them. Whether you're receiving invoices by paper, which I highly recommend not doing it, or by email, have a process. You need to be clear who is receiving the invoice from the vendor. What is the process? Who is checking the mails coming in on a daily basis? If you're getting invoices in email, who is responsible for checking the emails on a regular basis? Starting from step one, establishing a process from receiving an invoice from the vendor and entering it in your system, and making a payment, whether paying by check or making an electronic payment, step by step, laying out the process very clearly, and also assigning a person responsible to each of those tasks. We highly recommend to our small business owners to set up a accounts payable at yourcompanydomain.com email and direct all of your vendors to only send invoices to that email. not only invoices, any questions they have about the payments, or any questions they have about, say they have to correct the invoice, or they're following up on payment, any communication with the vendor, always ask your vendor to only send those invoices or queries to accounts payable at yourcompanyname.com email. And I highly recommend converting all of your vendors to electronic invoices instead of receiving paper invoices. What happens with that is you have to rely on the invoice to come in the mail. It delays the process. Someone has to open the invoices, and if they have to pass it on to the person who is processing it in the accounting department or accounts payable department, they have to scan it. So it just adds more step to the process and more time in the receiving, entering, and paying an invoice. You have a accounts payable email. The vendors are directly sending the invoices to that email account, and you are assigning someone, making them responsible to check that email regularly and process invoices coming in. So it's just more efficient, and it's a great time saver as well. And number 2 we recommend is, we highly recommend using an accounting software to enter, track, and pay your invoices. We don't recommend tracking invoices manually or in an Excel spreadsheet. Use accounting software tools like QuickBooks, or even there are tools available to automate your accounts payable process like bill.com. So if you're using accounting software, make sure your as soon as the invoice received in the email, it's entered in the system. That way, you are showing your liability to the vendor correctly in your system as well. So that reflects the correct financial position of your business as well. And having an accounting software also enables the next step of automating it with tools like bill.com. And there's plenty of other accounts payable automation tools that are available that you can take advantage of to eliminate some of the manual step in the process as well. And number 3 is establishing a 2-way or a 3-way match system. What is 2-way match? 2-way match happens when when you receive an invoice, checking the invoice against the goods received or service received. This ensures when you receive an invoice, you are not making the payment right away. You are making sure there is a 2-way check in place, confirming whether the service has been received or goods has been received. That's 2-way match. Checking your invoice against a goods receipt or invoice receipt. Next is a 3-way match. If you also follow a purchase order system, then you have to make sure your purchase order, goods receipt or invoice receipt, and then your invoice, all 3 matches before you make a payment on the invoice. So that is 3-way match. So if you have these systems already established and set in place, you are instructing the person responsible to pay the invoice, making sure there's the 2-way match or the 3-way match is satisfied before they go ahead and make the payment. Then that helps avoid some of these errors as well. And number 4, reconciliation of the major vendors on a regular basis. So you might be receiving statements from the vendors on a regular basis. If you're purchasing from the same vendor frequently, they'll be sending you a statement, not an invoice, showing all the invoices that are outstanding that you need to pay. They will also age the invoices based on how many days it's due. So we highly recommend our small business clients to identify top 5 vendors, like the major vendors that you regularly purchase and in large volumes. So you sort the vendors based on the amount that the volume of transaction you do with them. So we pick like top 5 vendors or top 7 vendors or top 10 vendors based on how many vendors you deal with, and have the accounts payable person or your accounting department reconcile the statement for those top 5 vendors on a monthly or a quarterly basis, depending on, again, you decide that based on the volume of transactions and the number of vendors you have. If you don't have that many vendors, then reconciling the statement on a quarterly basis is fine as well. But if you have more vendors, then reconciling on a monthly basis would make sense. So you decide based on the volume. And we highly recommend not without reconciling a vendor statement over a year. Within a year, you should have at least covered majority of the vendors, if not all of the vendors, and reconciling with the statement. That helps ensure that you entered all the invoices that you received, you made payments, and what you show as outstanding also matches what the vendor says is outstanding and receivable on their end. Next is segregation of duties. So this is very important to avoid any errors or staff fraud. Say you have a person who is responsible for receiving the vendor invoices, entering that vendor information in the system, and also paying that vendor. If you make one single person responsible for all these three activities, then the chances of the staff making fraud is really high. You don't have another person and checking whether the vendor is legit, or we making the payment correctly to that vendor. So you don't have a system to check and track if your staff is making a fraud or stealing money from you. So that is why we highly recommend having at least a two-step process. The person who is responsible to receive and enter invoice, input all the vendor information in your software, should not be made responsible to also make the payment. There should be another person, or either through an approval process, someone has to systematically approve before the invoice gets paid, or having a completely different person who is responsible and having access to your banking system to make payment to the vendor. Separate these two tasks, so that way you can avoid not only this is not only to avoid the staff fraud or anything like that, but also having another person check the information entered, invoice amount, or this can help avoid any data entry errors or double payments, excess payments. Having another set of eye always helps to avoid all of these errors. Lastly, sense. Paying some of the vendors give you incentive or discounts if you pay your invoices early. Like if you have a 30-day payment terms with your vendor, they would say if you pay in 15 days, we will give you 2% discount on the invoice due. Something like that. So if you have any vendors offering that kind of service, and if it makes sense cash flow wise for your business, you should pay the invoice early, so you can take advantage of the discount, and also that helps boost your business credit score as well. So only if it makes sense. It's not feasible for most of the small business owners. You will not have, you would rather wait and pay the invoice when it's due if you want to manage your cash flow. So only from a cash flow perspective, if it makes sense, if it doesn't make a difference if you pay 15 days early, but you can take advantage of the 2% discount, then I would highly recommend you go ahead and take advantage of that early payment discount. And also there could be like if you order in bulk, there could be a reduction in prices. You want to go check, weigh those pros and cons to more from a cash flow perspective to decide if you want to take advantage of that or not. So doing that will help you save some money on the vendor payments, and then also help boost your business credit score. Yeah, these are some of the ways if you put in place, you can avoid some of the common errors and also help build a strong cash flow system and a strong account payable system within your small business. Hope you enjoyed this video and you learned a lot from this. Please subscribe to my YouTube channel, and also make sure to press the bell icon so you will get notified when we release more videos in the future. Thanks for watching, and I will see you in the next video.